the most important role, at least from a product perspective, that I've found in my life is like someone who acts as a coach for me. Right? Like think about sports. Sure. It is like the athletes always have a coach with them. I feel like why don't we have always a coach?
And we were working at BNY Mellon. And at the same time, I remember that their product was quite complex. It was very, very complex, that the thing that they were selling at that time. So it's always this complexity versus usability. What design principles help you manage that trade off?
You've touched a topic which is very close to my heart, which is this whole idea of complexity. And that was one of the reasons I also joined financial services. I felt like, design really shines when you have a very complex problem to solve.
Today, we're joined by Devjit Basu, a visionary product leader whose journey through the worlds of UX design, product management, and financial technology exemplifies the innovation driving digital economy. With over a decade of experience leading all aspects of product management, Devjit has developed a reputation for identifying market opportunities, defining compelling product visions, and delivering results that transform how consumers interact with financial services. Before stepping into his current role as VP and head of product at Catapult, Devjit served as director of product at MoneyLion, where he launched and oversaw lending products with a laser focus on user acquisition, product strategy, operations, and design. Welcome to Discovering Genius Within, where we talk to innovative product managers, product leaders, and executives on how they've transformed the industry.
We met at Pershing in 2009, if I remember, and I was really intrigued by what you did, user design and UX, and you were really passionate about that. Tell us a little bit about yourself. Tell us a little bit about how you got there and what has that led to from that point on.
At Pershing, I was primarily a UX designer, and I just completed my MFA in design technology from Parsons. And I joined Pershing primarily attracted by the financial services aspect of it, and as a user experience in that kind of a domain, I think provided a lot of opportunities. Since then, I've moved to product management and startups. At Pershing itself, in fact, a friend of mine had joined a startup, and he really exposed me to the world of startups. And at the time, I was also looking for opportunities in product management. So that's how I joined my first startup. After Pershing, I went to BlackRock, and then I joined my first startup. But since then, I've been basically in startups, fintech startups specifically, and in a product management role, although a lot of times design also falls under me.
So you really went from architecture to product management, and in between, you had a stop for design. Walk us through that trajectory. How did that happen? How did you transition? And what do you feel about this whole role of product management that you're in at the moment?
I see the Gen X as being a very lucky generation. We saw a lot of change, right? And a specific change was this whole change of digital transformation, like where we went from sort of the world of atoms to the world of bytes. And so for me, I think it was a more literal transition like that, where I started with architecture. I think the central theme, the reason for me to do my architecture in undergrad, I feel like I had a creative bent to me. Like I did painting, I did sculpture in school and stuff. And then when I wanted to do something, I felt like I was also, in a way, sort of practical. Fine arts wasn't something that I felt attracted to. I felt like design was a better world for me to get into because I also had an aptitude for building things, tinkering with things, etc. So it seemed like architecture was the best sort of match for my skill sets. And that's how I got into architecture. And I'm going to date myself here, but as you know, like there was this whole revolution of computers that started coming in, like in all fields. And in architecture was, obviously computer aided design was pretty early on. But while I was there was explosion of 3D animation and 3D visualization. And that's how I got into 3D visualization. And I felt like I wanted to go further and explore computer graphics and working with digital rather than actual building spaces. So I did finish my architecture. After that, I worked a little bit in television and I did some broadcast graphics and stuff, but I felt like I needed a degree and further education to be able to really get into this field. And that's how I got my master's at Parsons. It was a master's in fine arts, but the focus was design technology, which was basically how to use technology in design. And that's how I made that shift from the world of atoms to the world of bytes. And then from there, I focused on interface design and user experience first. But then as I worked in user interface design and UX design, I realized that there were a lot of decisions made upstream that were being fed to me that had a big impact on experience. And for me, experience is huge. Like even as an architect, I feel like I'm building experiences at the end of the day using technology. And what I'm doing here is also building experiences. But those decisions seem to be having a pretty significant impact on that experience. And that's how I realized. And I started working obviously with product managers around me who were giving me the direction in some way and setting up the problem for me to design. And I felt like there were decisions there that I would love to make and have a much greater impact on that experience. And so that's how I think I kind of shifted from one to the other. Obviously, I'm giving this to you in a matter of a few seconds and minutes, but this happened over, a decade or so.
That's quite a transition. That's quite a journey. Talk to me a little bit about the difference of product management when you did that with startups as compared to large organizations like financial services organizations.
Yeah. So it's a big difference. Like I told you, when I was at BNY Mellon and then I went to BlackRock also, I was at large financial corporations and I understood how they worked, but I had no idea of the world of startups. I somehow was not exposed to founders or even people working at startups, etc. It just so happened that a friend of mine went to a startup and he told me about what startup life is like. And he said, I know who you are and you're going to enjoy it because it's so vibrant. There's so much happening and you don't get compartmentalized into just doing one thing. You have to wear multiple hats. And that seemed very like me. Like I'm someone who's not happy just staying within a particular domain. And I'm very multidisciplinary, going from architecture to art to design and then to product management. So he pulled me into that world and he was right. Stand the difference is the business model, right? So this is something I realized from going from BlackRock to my first startup, where BlackRock had a fantastic business model, right? It was, you don't touch that. That's like it's minting money, it's performing well, it's profitable, everything's like just right. They've found the market fit and they're scaling, right?
Yeah.
That's the situation they're in. So in a situation like that, as a product manager, it is actually a virtue to kind of protect that business model and do incremental changes, find other areas, optimization. Those are the important areas where you work and you enhance and scale that business model further. Now, when you go to a startup, there is no business model. There, you're looking for a business model. You're in the search for it. So you have to be as disruptive as possible. You have to try multiple things. Many of those things will fail. And it's okay to make mistakes. It's okay to fail. It's okay to try and disrupt some things even and try different ways of doing the same thing, right? So that's the main difference. And so the way you operate, the way you look at it. And I felt for me, it was a better match also because there is some level of creativity that is involved when you're looking for a market fit rather than when you're scaling and optimizing an existing market fit. So that's how I felt like the difference was between the two.
The one thing from my experience I could share is that working in large financial services organizations, you find people don't want to fail. They're afraid of failure. And that's one thing they could learn from startups, that it's okay to fail. It's okay to make adjustments. That's something you just mentioned.
I would though caution a little bit there. There is a reason that culture is built like that. Like I said, it's that business model. There's sometimes the cost of failure can be a slightly higher risk at a place which is already kind of scaled and it's serving, like BlackRock at the time was like, trillions of dollars in assets under management, right? So there is a little bit of a higher cost to experimentation. So there is a natural reason for why that culture is like that. So I started to appreciate that a little bit more once I got out of BlackRock rather than when I was there.
At Catapult, you are head of product management. And one of the things that you do is to serve underserved population and provide them financial access. So talk to me a little bit about the product management challenges that you face with this unique mission that you have.
One of the things that I've started noticing immediately, right from my first startup, which was an account opening platform for retail banking, is that in a CPG environment or in any kind of a commercial environment, usually the more customers, the better, right? But in banking, you actually decline customers, you reject customers, right? This is like very unusual from somebody who's in like say, just building, widgets and
Yeah. Yeah.
TVs or whatever it may be. The more customers, the more you sell, the better it is, right? But in banking, in fintech, in any kind of a financial service, it very quickly comes back to a point of you have to decline certain customers and you can't just give your product to everybody, which is an interesting dynamic, right? And then what it causes is exclusion inclusion problem, and it causes customers who might want your product but are not able to get that product, right?
Yeah.
And so that is what we call the underserved population. It depends on what you're talking about, whether you're talking about lending or banking, but there is always this underserved population who either the product is not built for them, so they're not really able to kind of use it because it's been designed for someone who has a higher net worth, maybe, or it could be something that is there outrightly kind of rejected from, right? But what it does is it creates this scarcity mindset, right? And they already firstly come with a scarcity mindset because they're underserved. They don't have enough of the funds that they need. They don't have the right services that they need. So it creates a sort of a feedback loop, which is not really helpful for them, right? So they get into a scarcity mindset that affects their behavior in certain ways. And they're able to get even less of those services that they actually need even more than the others, right? And so what you have to do when you're in a consumer lending situation is you have to be able to, and that is one of the ways that the latter companies that I work for, both Moneyline and Catapult, what they do is they specifically target this underserved population and try and see if we can help them through technology, through different product models, etc. So what we did with them is basically understood what their needs are, and then very regulatory, from a compliance perspective, make sure that we're very compliant. That's a big aspect of it.
Mhm.
Food app is very important, and rightly so, because these are, they're underserved. They have a high demand. They're usually in situations of need where they might be desperate for certain funds or certain products, etc. So they can be easily taken advantage of. So you have to do it in a very responsible way. And regulatory constraints obviously help you with that. But you have to also, if you're in there for the long term to help them, then you have to make sure you do it in a responsible way also. But finally, what you have to do is you have to really measure risk really finely and then make sure that whatever you're offering them is the right product for that individual customer. Mutually beneficial scenario where if you give them the right product and you give it in a responsible way, you make things transparent, they will understand it better, they will use it better. And as a result, they will become repeat customers. And they will, as a result, be able to, in consumer lending, it's essential that you get good repayment performance, right? So if they're able to give the good repayment performance, the whole thing works better. And that's how, it's basically good for both the customer and the business.
You talked about good for both the customer and your organization in terms of helping the such vulnerable financial consumers. You also talked about managing risk, which is fantastic. One thing I'm trying to get a little bit more sense of is how do you make money? So, what's your business goals, and how do you sort of balance your business goals, maybe of profitability, versus these kind of financial consumers and their needs?
Yeah, I think the important thing to understand is like you make money like anybody else, right? You provide value to a customer and the customer feels like they have gotten value from that and then able to then as a result part with some of their funds to be able to get that particular value, right? So if you take a very simple case of just lending, right? There's a customer who's at the point doesn't have the funds they need and as a result they get funds from a consumer lending company and then pay back with interest or with additional fees or with additional amount that they might give. So there are multiple business models out there. So that's the main thing. I think the alignment question is an interesting one. I look at it as a flattening of the funnel, right? So if you look at a funnel as acquisition, conversion, and retention, right? There are many businesses that are very short term. And what they do is they have a very wide funnel at the top where they're acquiring a lot of customers and they're quickly converting them and they're getting some benefit out of that, but they're not retaining them and they have smaller and smaller numbers actually come back and reuse the product. So that is a very short-term kind of a business model, and that doesn't work well in the short term for the customer or for the business. So the way I see it is more of a flattening or even slightly widening of the funnel, where basically you take a certain number of users, you convert them, but you also are able to keep them as long-term customers, and you have a relationship with them where they keep coming back over and over again because they recognize that value and they build that relationship over time. I think that's the best way to sort of make sure that the business's needs and the business's interest is also aligned with the customer's interest, and it is basically a long-term relationship that you build out of that.
So you mentioned that you led the transformation of products when you acquired Andera and Bottomline. Now, these are separate product lines. How did you really focus on evolving these products? What was your approach during this time? Because these are separate companies, separate products that you want to now integrate with your product roadmap, with your product journey.
So in the first case, when I think you're talking about the Oflows acquisition by Andera. And Oflows was an account opening platform. It was very early stage, but it showed a lot of promise. Andera was already struggling where they had to make too many customizations. And what Oflows did was it made the product flexible from the ground up in a way that it fit just better at scale because the customizations were not different code bases, etc. It was just like different configurations of the same product. And so it could scale much better. So that was the story there. And in that case, I think it was just a matter of integrating, not really integrating, but it was really migrating kind of existing customers to the new platform. That was a big concern. And there was a lot of effort that went into that, both from a sales and growth perspective, as well as a technology perspective. And the other was just parity because it was early stage, although the Andera, what we call the legacy platform, right, was working with a lot of different banks. There was a lot of features in them, and especially like different banks would have different special custom features built for them. And so it would be when they tried to migrate over to the new platform, they'd say, oh, but I don't have this particular feature. Like, how can you get me that? So there was a whole parity exercise. I mean, we understood from the get-go that we won't get all the way to full parity, but at least we need a certain level of parity with the old system in terms of the features that were available on both so that we could get that migration going. And that was the whole exercise. And then it took a year or two really to go through the whole thing and make it all happen. But we managed to make that happen. So that was an acquisition that was about getting a new product and actually using existing customers to switch over to that new product. Now, when we went from Andera to Bottomline, that was a slightly different. That was already a mature product in the retail banking space, and Bottomline was a commercial banking enterprise. So what they wanted to do was the acquisition was about getting the banking customers that Andera already had and trying to upgrade them to commercial banking also. That was one. So they really, rather than just the product, they got the customer base and very interested in that customer base. The second thing about it was just using that same account opening platform for retail banking as, and at least the components of it to do onboarding for commercial banking. So there was a lot of commonality between account opening of basically a retailer, a consumer onboarding into a retail banking platform and a commercial customer onboarding onto a commercial banking platform. There's some commonalities there in terms of just underwriting, etc. So what they did was they started to use that platform. And so it was very different. And I think what although more true for Andera to Bottomline, what was true for both is this whole reframing of the platform itself. Like suddenly there's a line drawn in the sand and you say, okay, now we're going to focus on a slightly different kind of a direction as to where the product needs to go now, right? It's no more like trying to find the best customer fit. There's this other sort of business need that we have. In one case, matching it and bringing parity with the other platform. And the other case, like making sure that it's integrating and it's configurable enough to be able to address certain commercial banking use cases, which are not even in our goal of what we wanted to support, right? So it kind of transformed the product in a slightly different way.
Let's switch a little bit from strategic product management to a little bit more tactical. And as we go through this whole podcast, we'll really go down the tactical journey. But one of the things that is between strategic product management and tactical product management is this whole idea of product prioritization, especially when you have conflicting stakeholder needs. How do you manage that?
I don't know if I manage that or if I kind of actually are immersed in that on a continuous basis, like every minute and second of the day, right? It's very interesting. The first thing that sometimes it is easy and sometimes it's very difficult, right? The easy, maybe contrasting between those two might help kind of understand prioritization a little bit. When I say easy, I mean from a executive leadership perspective, from a strategy perspective, the strategy is very, very clear and then very, very focused. Right. Sometimes you get into a situation like that where it's absolutely clear and aren't competing sort of visions that you have to balance between. And in those cases, everybody sort of aligns to that and you know that product has to fit all of that and that's what gets prioritized because the OKRs are there. And then the ideas for how to kind of achieve those key results are also very clear and you're building that. So it's in that cases, it becomes more of a quantitative kind of a numerical kind of an exercise of making sure that we are able to understand what the level of effort is, what the return on investment might be, right? And what is the cost of delaying it? Like, what if I don't build it for a couple of weeks? What am I losing in that case? And usually it becomes a mathematical kind of a equation and you can really sort them quite easily. When it becomes difficult, and I see this more, you've come from a sort of a investment sort of a perspective, right? There's the whole concept of beta and alpha, right? So there's a beta and you can kind of ride that wave, right? That whole idea is going well and any kind of contribution to that, and I'm talking in product management terms now, but so as long as there's an overarching vision and a direction and you can kind of make sure that you're supporting that, that's always a safe bet. What happens is sometimes you get ideas which are sort of new ideas, right? Yeah. And they're not proven. There's a lot of uncertainty to them. There's a lot of complexity to them. And there's a lot of unknowns over there where you need to figure out before. And usually those are the ones which are also very stakeholder specific, right? One stakeholder feels this is a really good bet. We need to kind of double down on this, while the other stakeholder feels something different. So what I feel like you have to do in those cases is expose that as best as possible. So I like this idea of, I don't know if you've heard this phrase, steel man, right? When you straw man something, a steel man. So you take the best case of that and you present it, not just, you help the stakeholder formulate that vision in a way where it's very communicable and you communicate it to the rest of the stakeholders. So everybody's on the same page and people don't feel like this is my idea or this is their idea. They all look at it in a very transparent and a reasonable way, right? And so once you do that, it becomes easier to look at it as a team and figure out what the idea's worth is and how we feel. And then all the questions that come up from that process are also very, very helpful. And then the other way to deal with that is the alpha ideas, as I say, is like you have to figure out what are those assumptions that you're making about them, which may not come out to be validated to be true, right? And what are the risks involved in it? And how do you create sort of the MVP version, as we say, right? Like the most smallest something that you're going to use to learn and validate certain assumptions rather than try to build anything that's, revenue generating in any way, right? So the goal there is to try and build something so you can de-risk them. And the idea of making them small is that you have multiple of them. So you can try out multiple of these ideas. So then it becomes less of an evangelization or supporting a particular product by a particular stakeholder, like those kind of dynamics go out. And you could actually look at data of, okay, we did a little experiment and you're right, it's actually validated and it's showing a lot of demand, so we should double down on it. So being able to build a portfolio like that, I think really helps in managing the prioritization. The only thing I would add to that is, we have to avoid surprise, right? What we do is we make sure we constantly communicate this, keep it very transparent and give really good explanations for everything, which are backed by evidence and deep insights, right? So once you do that and everybody sort of understands that, then decisions that are made, regardless of what decisions are made, are acceptable by everybody and you can get everyone behind it. So it's definitely much much less contentious at that point.
You know, Marty Kagan from SVG, he's written
Yeah, big fan.
three books. One thing he mentions is this product trio, product management, product designer, and a technical lead or an architect. You spanned your career across all the three. And the two things that come to mind from a designer perspective is when you worked at BlackRock or when you worked at BNY Mellon. How has that experience of UX design influenced your approach to product management?
There are obviously a lot of things which are common between the two, which is the creation of an experience. The intersection of design and technology is really in both. But there is slight different perspective and emphasis, obviously. When I was at BlackRock, BNY Mellon, user experience even then was still sort of up and coming field. And at the end of the day, they were both very technology heavy organizations, right? You really had to raise your voice and try to be the customer advocate and try to make sure that they are working on the design also, not just the functionality. Right? So what it meant was doing a lot of evangelization. And that is one thing that I definitely feel like I had to do both these places, which really helped me understand, even from a product management, that is very, very helpful, and I apply to product management also, right? How do you evangelize? In that case, I had to evangelize a discipline. But when I'm in a product management context, I'm actually evangelizing the idea itself. So that is very, very interesting. I remember I specifically tried to learn about how to convince people, how to persuade people. There's all kinds of how to present really well. So those are things that I definitely apply from that world. But beyond that, I think what's important is the perspective and the design function within the overall software development lifecycle. You have to make certain things. Back in the day, like technology would just go start and building things too early, right? And they would not take into account whether it's design or whether it's the marketing, the go-to-marketing ideas, or, sometimes even legal constraints, etc. Right? And then so having been in that shoe, like having that hat, sort of, you understand that it's very important to incorporate these things earlier. So when I am now in product management, very, very sensitive to that. I make sure design and marketing and legal and whoever else, right? Like even risk and underwriting in certain cases, they're involved as early as possible, because there is very good input that they can give you, and you can de-risk the project earlier. You can make sure its success is guaranteed by doing that, basically, right? So that's, I think, one of the things I definitely feel I've learned from being in the design field and then coming into product management. The only other thing I would add is just like I'm just closer to user behavior as a result of that. When you're a technologist or coming from technology into product management, you're just closer to the technology. You understand how these things work from an API and the code itself, etc. But what I bring is slightly different, which is I'm closer to the user. I really understand user psychology and behavior. And so what I end up finding myself is in roles which are more about building the experience rather than focusing on more of very deep technical architecture kind of product management.
You had a passion for user experiences, being close to the user when we met, and we were working at BNY Mellon. And at the same time, I remember that their product was quite complex. It was very, very complex, that the thing that they were selling at that time. So it's always this complexity versus usability. What design principles help you manage that trade-off?
You've touched a topic which is very close to my heart, which is this whole idea of complexity. And that was one of the reasons I also joined financial services. I felt like, design really shines when you have a very complex problem to solve. And that's where design becomes critical and has a much more important role to play. I would say while I was in my Parsons doing my MFA, there was this book that was proposed that we all read, and we read it. It was called Interface Culture. It was about this guy, Stephen Johnson. He's written quite a few books after that. I've read them too. He had this really good kind of a line which he used for interface, right? What is an interface, right? He says interface is something that lets you imagine infinity. right? So on the
Yeah.
one side is infinity, that you can substitute that with complexity, right? There's unending complexity on the other one side. And then the interface allows you to manipulate, understand what that complexity and is allowing you to manipulate that complexity. I really like that definition of an interface. So when I was in that world of user experience design and interface design, the idea was, how do you take that complexity and then present it to the user in a way that it becomes something that they can imagine, understand, and eventually manipulate in some way, right? So that is the role of the interface. So yes, there are a few things that you can do, but at the end of the day, it's all about complexity, right? It's all about taking down that complexity down to simplicity. Then how do you make something that's complex that and make it simple? And there are various principles, but one of the main ones that usually people do not think about is the cognitive load of
So yes,
complexity, right? You have to make sure that you understand how the human mind works and what are its biases and how do you use them to be able to present something so that the customer understands that as best as possible, right? And so to do that, there are various design patterns and user experience things that you do, right? One of them, for example, is just progressive disclosure, right? Like you don't immediately display everything, right? You make sure that the user goes on a journey as they explore that complexity, right? Going from what they really need to know right now to, once they've understood that, taking them to the next level. So you're almost graduating the user through a series of stages through which they're progressively getting exposed to that complexity. There are also other things like chunking, right? These are all UI, UX principles. Like you make sure that you're presenting information in bytes and numbers, which are obviously manageable by the user. Other than that, like visualization of information is very, very important. So I come from a visual background, so just understanding whether it's data visualization or whether it's how how the information is presented in terms of a certain hierarchy within the information, which is very basic visual communication, visual design kind of principles. So those are the things I try to apply, but there's always never one way to do it. So making sure you experiment and test different ideas out is very important too.
So, use the Chase banking account, checking account, saving account, credit cards. I have investments in Chase. I use that product on the desktop and on mobile devices. Now, if you think about internally what's happening, and we know that both of us been in that space, that these are not one suite of products. It's like a suite of products that are built and provide a cohesive experience. Given that idea that you're chunking, you are taking them through this journey from one product to the other and making it seamless, what are some lessons that you've learned when you do that?
Yeah, I think the first thing is consistency. Consistency is very, very important when you're going across different products and across different experiences. And I don't just mean consistency. I think you were talking about a product suite, right, with multiple products within it. But I try to see it even further. One of the first things that we realized when we were working in retail banking, for example, right? Or if you're even working for, let's say, a more of a B2B kind of a environment, right? If Apple comes out with a new interface and it is fantastically designed, and that's, the average user is now using that, their frame of reference is just shifted, right? They are expecting a much higher quality of design and experience than otherwise. So making sure you're consistent both in within the product and within the other systems that the customer uses on a day-to-day basis, right, is going to just make it much more cohesive for you at the end of the day. It is not going to create like hiccups and sort of jarring modes of operation that they, or unknown or unique kind of modes of operation that they're not used to, which is always a problem, right? So that is very, very important. And then I think that as you build that, you realize that there is a depth to it. So now I'm speaking as a product manager and someone who's actually trying to build these experiences. You realize it is not skin deep. It is not just the CSS, it's not just the front end design. There are deep kind of interaction patterns that go all the way to making sure that you have microservices architecture, making sure you're API first and the APIs are driving everything, making sure you have as much at deeper layers of the architecture rather than just in the front end. And that's what makes it easy to maintain and make sure that these are consistent. And the consistency comes from the fact that there's a deeper integration to those products, which are down all the way to how data is stored. So that is something that I think that we realized. And I'm really dependent a lot of times on my technology counterparts to make sure that they're building it in a way that there is elegance in that architecture and design so that, as a result, it presents itself in the same way across different products of the same platform.
We talked about product management. We also talked about user interface design. One thing we want to focus now a little bit on is technology and innovation. And this whole idea of AI and ML that has come in and the rise of that, how has that affected financial services? And then also how it's affected your approach to product development?
Let me answer the latter question first, because there is a sort of a recent phase of AI with LLMs, and then there is just machine learning, right? I feel like I at least have been exposed to AI and machine learning for a while, but the new phase of LLMs is a whole other thing. And it's absolutely fascinating. And I'm just as I'm sure you are, right? Like just beginning to explore this. But already, like I know that I've already used it in ways that is just going to change the way that I do product management forever, right? So, for example, I'm doing research on it that I was unthinkable before this, like market research, product research. So, in terms of just research, it's great. But more than that, it's even allowing me to synthesize that research, summarize it, and create a sort of a document of sorts, right? Like where it's able to help me work much faster in putting my ideas down on paper, right? So synthesizing that information is something that it's doing already. Large amounts of data, multiple sources, etc., and bringing that together, right? It's amazing. And then finally, like the word, it's generative AI at the end of it. So it's generating ideas. If I tell it to actually give me a few ideas, it is so much quicker than more for me to have to think about these and then try to choose one from them, right? Now I can just have them come up, right? From a generative AI, which brings up all these ideas and just, it's more of a selection process rather than having to actually come up with the idea itself. So those are the main things that I think, which are very exciting for now. But going back, obviously, we've been using AI and machine learning for a long time, which is basically advanced statistics, if nothing else. And then what it does is that one example I can give you is anything that is basically diverse, or if it's complex. In those cases, usually there has been a manual kind of a workaround, which is you needed a lot of people, right? Resources to be able to get that part done. And what it does now is you can use an agent of some sort of machine learning kind of a routine that learns it and are able to apply rules at a very granular level. So it's not coarse and it just doesn't do one thing. It can very specifically address the particular nuances of any particular situation and apply the rule to it. So one of the things that we do is we lease non-leasable. We have to lease our products to customers, but we can't use non-leasable. So the non-leasable products for that, right? Yeah. So we can only lease out something that is a durable good, which is called a leasable product. So it's always been a challenge to figure out, and you can imagine the amount of SKUs out there and the amount of different products out there, right? So how do you make sure that you're not picking and giving out a non-leasable product to a customer, which would be a compliance issue, right? So what we do is we use machine learning to be able to read the description of a product and then based on that decide if it's leasable or not, right? So this is again something that we use machine learning for. It goes down and does supervised learning where you give it a bunch of descriptions and then the AI slowly learns which are durable goods, which are not. And then now you give it a new item and now it can actually predict whether it's leasable or not. The other is just underwriting. Before that in Moneyline, what we used was just customers. Because it's the other thing that AI is very good at is probabilistic kind of decision making, and also just being able to predict something in a probabilistic way, right? So what we are able to do is that obviously a customer could behave one way or the other, right? There's such varied circumstances the customer is in that they might behave in one case where they go and pay the loan, in other cases they're not able to pay it, etc. So underwriting is very, very interesting because you can take into account very specific circumstances of the customer, both in time and space, and then you can make that decision at a customer level. So doing anything that is very, very nuanced like that, I think that's where the machine learning routines really help a lot.
What are some emerging technologies, trends, do you think, that are significantly going to impact financial product development in the next few years?
I think we are all excited about the same things, and well, I guess if you're at least following the fintech space, AI, crypto is, I think, an interesting one. Crypto and stable coins specifically, from a payments perspective, I'm excited to see what happens with that, because once you work in payments a little bit or adjacent to payments, you realize our payment system still feels very kind of archaic. The whole settlement time that it takes for any payment it just seems like in today's day and age, it shouldn't be like that. I think that is an interesting space, and real time payments, right? Once that happens, there's a cost and an efficiency hit that is affecting everybody, both businesses and consumers. So those are, I think, interesting. I think embedded finance is also an interesting trend, right? Where it's not financial institutions that are giving giving you the financial product. Really, they're sort of embedded in your shopping experience, in your social media experience. I think just heard Chat GPT is now including sort of a checkout experience within that. So that would be fascinating, right? Like now AI could have. So that's all just extensions of how financial services can be embedded in a completely different environment. And so it meets the customer where they are rather than you having to go specifically to a bank to do anything, right? Or a financial institution to anything. And finally, I work in the consumer lending space. And like I told you, like underwriting and identity is becoming quite interesting. Like it all adds especially because I come from a user experience background, that the basic friction of financial experience, financial services is just this whole security and
Yeah.
sometimes some compliance and sometimes just fraud fighting measure that's making you do much more work, right? So any kind of advancements there is going to be very interesting. I've heard of financial sort of APIs like that. These are like I control my data. I give access to whoever I want to give access to. And then you have from a business perspective, a much more security and reliability on that information because of really being able to authenticate that user in a way.
Another thing that really fascinates me a lot is this whole concept of product leadership. And leadership is really important whether a product or a company succeeds or fails. I think this is a very important aspect of product leadership. So, as a product leader yourself, how do you go about building and nurturing good product teams or effective product?
And this is also another thing that I've been in the other shoe where I've had leaders who are really good. And what I have learned, and I try to do the same, is that the most important role, at least from a product perspective, that I've found in my life is like someone who acts as a coach for me. Right? Like think about sports.
Sure.
Athletes. Like the athletes always have a coach with them. I feel like why don't we have always a coach? But so when you're in a managerial situation, I really feel that's the perfect opportunity for me to be able to coach. Also, given that I have more experience than some of my junior team members. Then I think once you play that coach role, what you make sure that you're empowering people as much as possible. You're trying to make sure that they have the right skills that they need. And then obviously you're trying to give them good purpose and good goals to, work on and hone those skills within those contexts. And then finally, I think it's very important to make sure that they have psychological safety. I think there was a Google study who's talked about psychological safety, right? Like, and you talked about failures, like being able to fail safely. I think is very, very important. So I make sure that we have a space where you are empowered, you have autonomy, you have the skills that you need, and you have the right projects and goals to work towards. And then once you do that, you're allowed to fail, you're allowed to try, you're allowed to experiment, because that's the only way to learn. And there is humility and there is sort of transparency, right, about all of that we accept as a team together, where nobody feels like they are judged in any way.
Another role of a product leader is to communicate your vision and communicate vision across all different organization levels, different business lines or disciplines, and also your customers and teams. So, how do you go about doing that?
Just mentioned Marty Kagan, right? Like, I've read all of his books. I try to use as much as possible established sort of structures for doing that, and established methodologies that have already been proven well.
Sure.
So I use the now, next, later, way of doing things. Really like that because, like I said, prioritization is not something that you do once in a while. It's something that you do continuously, right? So I love that now, next, later. When it comes to communicating it, it's a matter of scale and it's a matter of audience, right? Like who is, sometimes it's a very complex idea of laying out like what is the roadmap, because there's different levels of detail that you can get into, right? And there are different aspects of it which are more uh, particular to different stakeholders. So what I try to do is I make sure that our roadmaps are sort of that way. There are usually multiple versions of it that I have, right? One could be just at a very high level, which is just vision, very high level strategy, something that I might go to a board meeting with, right, which lays out things in the year time frame. But the other end of the spectrum is something that I always keep, which is like a next data for a 3 month kind of a view of things, right? Which is very, very clear. It's almost like, okay, next 2, 3 sprints, we know exactly what we're working on. And then here's what's upcoming. So you can start preparing for it. And of course, you make sure you link them up to strategic objectives, exactly what success metrics we're gonna measure to make sure that they're successful and things like that. And then there's a more intermediate, which I call like my 3/4 view, right? For example, the product and the technology team and even immediately impacted stakeholders are more interested in the 3 month view. But then there's the 3/4 view, so that, more high level. And even sometimes technology would like to kind of get a view of what's coming downstream so that they can prepare for it some way, do hackathons and things like that. And it also gives you a further direction. So the larger organization might need more of a 3/4 view just so that they understand the larger direction of where they're heading. So what I'm saying, I guess, is I like different scales and different kind of versions of it. And that's how I kind of present it. And that's how I think it has worked so far. But it's something that I'm evolving all the time to try and figure out what's the best way to do this. And even
So, as a product leader, how do you balance sometimes being directive versus empowering your teams?
empowering is where I lean towards. I don't think directive works, at least not an extreme version of it, right? But how directive might get implemented in an empowering kind of an environment is where you have different scales at which you have ownership, right? Like, for example, I might own the overall strategy, right? Which I'm communicating to the leadership, etc. But then there are individual product directors who own particular product areas, right? So they might be owning particular value streams. So then they feel like they're the owner of those, and they obviously have decision-making power there. And I'm trying to just kind of help them coach through that. And then there are product owners who might be more focused on a particular epic and the tickets, etc., and making sure the implementation is exactly. But it's obviously very important to make sure there's good communication between all three. I think it's more about empowerment. It's more about ownership. And it's a matter of designing that ownership in a way so it's very clear, like who has the right level of influence for a particular area.
Yeah. One of my biggest audience for these podcasts are my learners, my students that come to my certified Scrum product owner class or come to NYU where I teach. What advice would you have for somebody who's coming up and wants to explore this field of product management? What could be some challenges that you could talk about? What is the certain things that you've learned are very valuable that you could share with them?
Yeah. I think, well, firstly, there's different paths that people come from. It's very, very important to understand what your priors are.
Yeah.
before you can decide where do you need to grow into, because it is a field that is, I think, the more range you have, the better it is, right? The more you have to handle multiple things on the business side and domain knowledge of whatever product you're working on, right? In my case, financial services, how they work. That by itself is very, very important. And you can learn that, but obviously some people come from a domain kind of and where they have to branch out into the other areas. The second area is about obviously technology. I think it's very important to understand that you are the tools that you're building with, right? These are the tools that you're going to use to build experience, to build functionality. And so the technology aspect, some people might come from like I did. I understood financial services pretty well. And I was obviously coming from a design perspective, right? But I did not, and I understand users and user research really well. But technology was something I ramped on myself, and I was making sure that I was constantly learning about everything that's coming up, both new and existing. The other thing is this, the creative part of it is also very, very important. Understanding users. And I put kind of creative and psychology and user behavior and all of that in one bucket. It's very, very understand to have empathy, right? To understand what customer, be able to put yourself in somebody else's shoes and see the world from that perspective. That's also very important. So depending on where you come from, you usually will have strengths in one or other areas, and you'll have to then build the strengths in the other areas. But given all of that, hopefully you're still doing that. But the thing that obviously makes sense is just you have to put yourself in an environment where you're exposed to it and you learn from it. And there are processes that are already in place that have evolved over time. No use reinventing the wheel, like understand those processes and believe in them and trust them for a little bit. And you start to see why they work in terms of how product management fits into software development. In a digital, I'm obviously talking in a digital context, but in a software development lifecycle.
Sure, sure. Could you point my audience towards some resources, books, trainings that you found valuable as you've come up through this product development ladder?
Sure. Everybody has different ways. So I might be, unfortunately, speaking to a subset of you of this audience just because I love books. So I love reading, right? And I've found a lot of value in not just product management books, but other books, because product management is sort of a microcosm of life in some way, right? There's decision making that you do, there's you're working to solve problems, and there's design involved in them, etc. There's a lot of planning, communication. So I think that is definitely a good place to start, right? They weren't even courses for product management, and I've at least come in a world that I had to kind of self teach myself most of these things. So I books were a big support for me, and then I'm talking about books about, like, one of my favorites is Anti-Fragile by Nicholas Nassim Taleb. Just to give you a flavor of that, these are not product management books, but they are very, very adjacent to it. The other is Annie Duke's like Thinking in Bets. It really helped me in terms of how to make decisions and how to kind of de-risk something and how to work with uncertainty and unpredictability, right? Very, very good. But beyond that, there's no substitute for actually being in there and trying something out, building something on your own. And once you go through that process, sort of end to end, I think there's nothing better than that. And if you're lucky enough to have an environment where you can try out these skills and dive in, like, don't sit back, try things out. And if you're lucky enough to have a mentor or coach, that would be perfect, right? So try to see where you can find someone like that, and then hold on to dear life as you go through that ride.
That's excellent, excellent advice, excellent sharing of information. I really, really appreciate you spending the time to come in and share with us your experiences, your knowledge for a lot of people that are going through that journey.
I hope so. I hope so. I mean, that's one of the reasons I feel like I've spent now enough years here where I've had an interesting journey, and many product managers now come from all kinds of backgrounds, and there's all kinds of journeys that they go through. So if this helps someone, that would be amazing. Thank you, and it was great talking to you.
Thank you. Same here.
Ever felt like your product backlog was overflowing? Stakeholders were pulling you in different directions, and the development team was skeptical about this thing called Scrum and Agile. Here's the thing: market conditions changing all the time, technology is changing all the time, and customer needs are changing all the time.
Companies don't just need product owners and scrum masters who create specs or run meetings. They need visionaries who understand customer value, focus on outcomes instead of outputs, and can guide teams to deliver it rapidly and consistently. The question is, how do you become that product owner or scrum master? This is where I like to introduce you to Concepts and Beyond's Scrum Alliance certification courses. It really transforms the approach to product management and agile. Concepts and Beyond delivers Scrum Alliance certification courses that grow the Scrum Master and product owner. These courses are about mastering the mindset that deliver product innovation and team performance. What makes these courses different? Instead of theoretical lectures, we use brain science principles to make learning stick. Our trainers focus on practical skills you can apply in your next sprint. Imagine coming back to work with the confidence to prioritize your backlogs effectively, the skills to collaborate with developers meaningfully, and the know how to deliver products that customers actually love. The product owner journey starts with the CSPO, which is a 101 level course that has no prerequisite. If you have work experience, I would suggest taking the ACSPO course to become a practitioner. If you like to advance beyond that, take the CSPPO course that focuses on you becoming a master practitioner. The Scrum Master journey starts with the CSM, which is again a 101 level course that has no prerequisites. If you have work experience, I would highly recommend you take the ACSM to become a practitioner. And if you like to advance beyond that, take the Certified Scrum Professional Scrum Master, CSPSM, that focuses you on becoming a master practitioner. And if you're a leader leading your team and your organizations, then consider taking the Certified Agile Leadership Workshop. This class prepares you to manage the dramatic change we have been experiencing and lead yourself, your team, and your organization effectively. Here's what you get: interactive sessions using innovation games that unlock product creativity, real world scenarios that mirror your daily product challenges, practical tools for backlog management and stakeholder communication, and a supportive community of product professionals and Scrum professionals. Our trainers become your guides on your side in your agile journey. The best part, our in person and virtual courses fit into your busy schedule with cohort style learning that gives you time to practice between sessions. Visit conceptsandbeyond.com or scan this QR code and discover how your certification courses can transform your approach to product management and agile adoption.